TGIF, everyone. Hi, Mary, Mike, David. Hope everyone had a decent week. Let's wrap it up by not trying to force anything today. Thank you, Laura. So guys, team, nice call by the team. Ryan, Andre wrote a nice little blog about it. Gold sitting right here on the 200 on the 4-hour. Looks like a breakdown could measure 1940 just based upon this formation. 2060 to 2000, 1940. 1920 is a major breakout line. Dollar's definitely been stubborn. Still's in taking out 102, but had a good week, right? It's Friday, so let's check out the week. I think it has a 2-week reversal working. It does. So we have a 2-week reversal after these 2 inside weeks. Trend line coming in at 102. So the dollar's on the verge of turning good for a rally. I think at least back towards that old high and maybe better. But we still need 102. But if you look at the 2 previous weekly closes, we're well above it. So hi team, Ryan, how are you?
Hello. I'm good,
nice
mate.
Call, nice call on gold. Silver really got creamed.
Yeah, I wish I was in that gold. I was looking to get in a bit higher up. I was hoping we get another little knock on those highs.
Okay.
So I'm not in it, but it's gone the right way. So.
Okay. So I mean, silver. Look at what silver did. That's a pretty nasty weekly candle.
Yeah.
And I was right about a turn. That's a heck of a candle on the weekly, on the gold silver ratio, which means, you know, of course, that gold is your preferred long compared to silver. So I thought we'd get back to 84, 85, back to this level. We're almost there. And silver, just Stel, I think we're at your buy level.
Yep, I got triggered earlier today.
How do I remember all this stuff? Huh?
It was a man. It was a very, very weird day yesterday. I mean, the dollar was up 0.5%, and silver decided they need to go down 5%. I mean, it makes no sense. But you know what? Sometimes you have to wait for the market to come to you, and FOMO is a difficult thing. But if you manage to avoid it, you get in at the levels that you think are better. So I got triggered into my last third long. I'm sitting happily now. Could we go below? Of course we could. Could we get to 22? Of course we could. But I'm patient. The people who follow us here on F.A.C.E and on the Morning Edge and all that, they know the way I trade this is with no leverage and very, very, very wide stops, if any. Anyway, you know, I'm happy with my position now. So watching action.
Time will tell. Time will tell, like everything.
And it's strange because yields were not rising. They're pretty flat. The dollar, yes, is strengthening, but really nothing to write home about. And then, you know, suddenly yesterday the market decided that it was silver's turn to get creamed, like you said. And I think it was a lot of things. I think probably some profit taking because the move. So copper, too. But in terms of actual price action, you know, I think there must have been some profit taking because the move higher had been very fast, very quick. You know, within a month and a half, we went from under $20 to 26. Position, I think, needs to lighten up a little bit, and you know, it's you know, you never go somewhere in a straight line. We keep saying this over and over again, and I will repeat. When I was selling that third of the position at 25.60, was it? And then we went up to 26. You know, there were people saying, "Oh, why are you selling? This looks so bullish." Well, you know, there are levels. you stick to them, you get in and out as much as you can, unless, you know, you want to buy something or sell something and wait 10 years for it, in which case you don't really care. But, you know, I like to scale in and scale out and find levels, get out, get back in, et cetera, et cetera. So it's, you know, you have to let the market find its balance. It's going to get one-sided, then it's going to move the other way, then it's going to get then one-sided the other way. You know how it works. It's ebbs and flows. So,
Yes. Well, anyone who looks at a chart knows that.
Yeah.
Right? You know, I mean, that the straight line moves happen at the end of a parabolic advance or waterfall decline. That's when you know, really get washout. So let me ask you this: with that you're fully positioned, you have a line in the sand as far as holding all of it. Say, for example, we got down to 23. Does that affect your long position?
Well, I have one full position by my standards. I have been in the past more than one position long, and this is a kind of trade, given the whole, you know, background and macro background. It's a trade that I really like. I could even add more, but at the moment I won't. So I don't have a level in the sand at the moment. I will wait to see how things go, if anything changes in the macro environment and the big picture. But at the moment, I do not have a level. If anything, you know, if we get to 22, I might be tempted to get some more in, but at the moment I don't. And you remember the last, I mean, I've talked about this so many times, the last big trade in silver which I had was mid 2018. I have to look back, and we got along around $15, and then COVID came and it went down to 11 something, which was a big hit. But you know, this is a trade I really like, and I said, no, I'm going to stick with that. And lo and behold, 2 months later, we were out at 25. So it's, you know, as long as you're not leveraged, at least me, the way I trade, as long as I'm not leveraged, I don't have any pressure, right? Or very little pressure, let's put it this way. So I like that. So yeah, I don't have any levels at the moment. And, you know, I will follow price action and see what happens.
Okay, Ryan, any view on the yen popping today? What might be behind it? It held, you know, this was it 134 level so far?
Yeah, there's just there's a general bid in the dollar just around at the moment. Not sure what the big driver is, whether it's risk or whatever. I think a lot of it is down to what's going on in things like euro dollar and cable. You know, cable's got hosed. That's now 3 central banks on the trot where the currency's fallen after the meeting. I think the market is sensing a top in the hike cycle for all these banks: the Fed, ECB, BOE. You know, maybe a couple more in the pipe, and then we're done. That's obviously driving what's going on in the dollar on that side. But you know, we're not breaking anything just yet. You know, cable held to 125, or is holding at the moment. Got a long way to go to break the trend. Euro's looking a bit iffy. Now it's moving under 109, but we've got a big traffic zone, 108.70 down to 30. Yeah, just I can't see any big ranges breaking at the moment. You know, big support 107 if we do head lower below here.
Any news today that could give the markets a spark?
Well, we've got the only data we've got is the Michigan flash survey coming up, and those inflation expectations are going to be a big part. Sometimes when there's nothing much else going on, the market can move on this data. So we'll keep an eye on that and see if that gives us some last minute beer pips.
Wouldn't you say that the inflation reports were good news, both of them?
You can look at it in two ways. You know, you look at the US CPI, it dropped, you know, just 1 point, didn't it? From last month. The month before, it dropped 100 points. So you could say, yep, it's still going down, but it isn't going down as fast as it did last month.
Okay. I guess my point is benign reports, and all you've gotten is you know, what we're seeing today, 10 handle. We're up 10 handles on the week. Yeah. So, I don't know. Everyone's still waiting for the breakout over 4,200.
Yeah.
Better
Does
get
that come
going.
with
And I was gonna. Good morning, guys.
Hey,
I was just
guys.
gonna say, if we get a debt ceiling, some sort of resolution, or maybe even pushed off, isn't that going to be a catalyst that drives us above 4,200?
Yeah, quite possible.
We'll see. It could be.
It's another one of these moments where we've got.
That's what's going to happen. They canceled the meeting. They're going to push it off till September.
Yeah, that's what I think is going to happen, and I think that's going to be the catalyst that drives us above those highs. But anyway, just my thoughts. But we can continue that conversation later. I know, Ryan, you were just going to say something.
Yeah, I'm not sure a September can kick changes much. Buys a couple of months. You might get a short-term relief rally, but it's not going to have the same impact if they say, "Yeah, we've got a deal for 2 years down the road." Then you'll see a bigger reaction, I think.
Right, and I agree with that, Ryan. But again, if we're looking for a move above 4,200, and I'm going to say this just because this is my expectations, is a move over 4,200 will be short-lived. It'll be enough just to squeeze out shorts, get Momo traders in, and you'd probably turn around and just smack it right back down again. And the reason why is, and this is the biggest issue, I believe, with the debt ceiling just in general, no one's addressing the effing issue. Like we have
70 years.
Yeah, I know. And I think the market finally will face the music regarding that. I mean, and the reason why it will is because we are in a different environment today than we've been in the last 10 years regarding inflation, regarding the indebtedness. I can't say that on a Friday morning at 5 a.m. Indebtedness, you get what I'm saying, of the United States. We're not facing the issues at hand. So any rally above 4,200, I'd be a seller at 4,250 to 4,300, and that's what I plan to do. I'm just hoping they patch some sort of crappy ass, push it off, kick the can down the road till September, squeeze out all the shorts. I want to be standing on the other side, selling it right to all those people getting long, and that's the way I'm approaching it. But anyway, I'll shut up now. I'll come back.
Without sounding like Steve, the debt issue is it's one of those things that everyone has their fingers in their ears about. It can't be addressed. It's too big. It's a monster, and it needs to be kept under the stairs where no one can see it, and that's how life will continue. Because if they ever start to address it, well, then you're screwed, mate.
Well, we kind of are, right? I mean, we're, again, I'm going to go back to, we are in a different world today, thanks to COVID and the ridiculous monetary and fiscal policies that took place during the pandemic, that we're in this inflationary environment that is a completely different environment than we've seen in 50 years. And the reaper's coming for us in the markets, not for us, not for you, not for any of us here, but you guys get what I'm saying.
I'll be down the pub.
By the way, congratulations to West Ham yesterday. I saw
what did they do?
We won our first leg of the semi-final.
Very cool.
Next one.
Wow. Okay. So who do you play next week? And then we got to move on.
Yeah, same team. It's just the away leg.
Got it. Hey, and good morning, team. Good morning. I just heard Steve's voice. Good morning, Dale. Happy Friday to you guys. And I was going to ask, and I know Kman is here. I saw him pop in here.
Yeah.
Hey, good morning, Kman. What are your thoughts about the debt ceiling and where we're currently at?
I don't think the market would take it too well to just push a can into September. I think the first reaction may be the opposite, actually, of a market that is not too happy just to see the can push to September. Now, after the fact, it may flip a little bit and we come back into the middle. But I would say the first reaction would be a negative one.
Wow. Okay.
Yeah, I'd say so.
I don't feel that way, but
yeah,
hey,
I know it's a contradictory opinion, but I think this market really wants it to be solved, and if you push it further out, it means that there's two big differences between the both parties, right?
Yeah, and I agree with that, but that's why I believe that it's the opposite. You know, you have to sell the rally. The first one is cheering that we get some sort of resolution. Just probably, and again, the knee-jerk reaction is, oh, now I got to go squeeze the shorts, and everybody's got to buy because there's all the money sitting on the sideline. Blah 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 blah.
You know, I have a counter to that.
Strength. Well, yeah, go ahead.
I have a counter to that. I was reading the other day on Seeking Alpha, I believe, an article by a guy who said that put buying in the triple Qs has dropped 75% since August, which with the kind of advance that we've had since January, you know, you would think the bears would be coming out and buying puts, but they're not. So viewed as a bit of a contrarian indicator. That they're, you know, and people say there's so much bearishness in the market. I still look at VIX, I look at put call ratios, and that may be what we're hearing, but that's not what's happening in the market. Or it would be, you wouldn't have a 75% drop in triple Q put buying over the last 4 months.
I mean, and so Dale, do you think that's going to contribute to some, you know, squeeze then?
Yeah, you know, there's some targets in the triple Qs up around 330 to 335, and we're like a couple of good days away from that.
You know, I can't, and this just let's talk charts, and we can talk price, because really, you know, I know this is totally what technicians will say, you know, price doesn't lie. And it really doesn't. I mean, in all actuality, I mean, the market is where it's priced at currently. You might think it's mispriced. You may have your opinions, which I obviously do. But if you look at the S&P, let's just not ignore that it hasn't pulled back beyond a 38% retracement over the last several months. You know what I mean? Like that shallow of a pullback means that, you know,
it's bullish.
It's bullish. I hate it. I hate it. I would benefit my FX portfolio would absolutely cream higher from a P&L standpoint if we broke through these lows. Yeah, I mean, it absolutely would. You know, being short some rand and pesos, you know, some of these emerging market currencies. But the fact of the matter is we are literally at the 38% retracement, and we're not going down. And matter of fact, we're perched right at the highs. So I again, this is where I have to look at it from a you know, technical point of view, an objective point of view, that it is just not pulling back. So anyway, that's just my random thoughts there. Steve, I heard your voice this morning. Good morning, by the way.
You hear my voice every morning.
I know it's as disturbing as it is for me.
I know.
So what are your thoughts here on the debt ceiling and what we've got in the markets going into this end of the week?
You know, we've seen this charade multiple times before, and we all know the ending to it. Now, does it have the potential of producing some short-term volatility? I guess it does, but do I believe that there is going to be something unexpected or catastrophic coming out of the debt ceiling? No, I don't think so. Now, I also agree with you and disagree with Kman on this one, although usually I agree with him. I don't think that the market will care much or be worried about it if they push any decision about it further down into the future, because let's face it, that's what the debt ceiling has been for years.
Mm-hmm.
It's a constant push the problem forward for just a few months or a year at best case scenario, or suspend it for a couple of years, but at the end we always come back to make a decision about it, and the decision is always another postponement of some kind, either by raising it or postponing it or whatever. So I also believe that if they push the conversation down into the future, the market is going to see that as a positive, another confirmation that whenever there is a debt ceiling issue, one way or another, it's being solved, and the market will start following on the next thing.
Yeah, I agree that in the end everything will be sorted. That is not. I'm not even questioning that. I'm fully agree. It's been sorted 78 times in the past 7 years.
Yeah.
So I fully agree on that. But I think here and now, pushing it back is not what the market is hoping or expecting for, because
yeah, but I don't think on the other hand that the market is going to really ponder about it too much. It's going to be like, we'll revisit this issue when the new deadline comes.
I mean, it's just the first reaction. I was thinking, I don't think pushing back sees any reason why market should go higher, but okay.
The only reason markets will go higher is because I think that the markets are on their way to move higher regardless, so it takes away a factor, let's say, that could have been weighing a little bit on that, being a kind of a headwind, right?
Yeah, it's it's going to be an interesting debate, and hopefully we're going to come to some sort of resolution here within that. We got to come within the next within the next week, because
1st of June.
I'm sorry.
Yellen says 1st of June. It's panic stations.
Yeah, but the problem is unless they hold back Congress from the break
leaving.
There's only like 5 working days left for them to put together something, and the congressmen and women, they need their vacations and their breaks, and
I know she does it politically, and she's to create the panic herself. But, she did put the 1st of June forward as the X date.
Yeah, that's I get it's going to be interesting to see if that X date gets like a hardened date soon. Hey, real quick, I want to shift gears since we're do you have a guest today, Dale, by the way?
No.
Okay, good. All right, cool. Then we can talk a little bit longer. So you guys and gals stick around a little bit longer. We'll go past our normal time just a bit. We have silver, breaking down. I know, Stelios, you were talking about that a little bit earlier. Now I from a technical standpoint, I want to say I see why you're buying it, but I also want to point out that we have a double top, should lead us a little bit lower towards 23. But if you take this previous trend line, we should stop somewhere around here, at least for a bounce, I would think, just technically. But I'm looking at gold. Gold looks vulnerable at this point. I mean, and if you look at the dollar looks also vulnerable to some squeezing. What do you guys make of the dollar index, or the dollar just in general? You got the euro, a big triple top channel breakdown. Looks like the euro, well, the targets for the euro just technically, oops, I didn't mean to do that, moved the wrong thing. Technically, the targets for the euro come down to 107.50. So if you guys are on the long side, you have to start bracing for a potential move to 107.50. And if you're on the short side, you're thinking, yeah, hey man, as long as we stay below 109.50, I'm targeting 107.50. So it looks like the dollar is poised to actually squeeze higher here. And everybody's you guys know, everybody and their brothers, mothers, uncles, nephews, monkey is bearish the dollar. De-dollarization, dollar's going to hell in the handbasket. The dollar is going to lose all of its value. It's going to hell. And why own it? So that overarching theme of dollar bearishness might bite some bears in the ass in the near term. What are you guys' thoughts about the dollar, where we stand right now? Stelios, since we started off with a little bit of an overview of some of the precious metals, what are your thoughts about the dollar here?
Yeah, I think it could break out. If it does, then it's going to take a bunch of stops above. What I liked about the precious metal move, or not gold didn't really move, but silver move, was that there was no real fundamental reason for it. I felt like a stop hunt, or some kind of we see this with silver so often. So as long as there's nothing fundamental driving that, I'm perfectly happy accumulating. But yeah, the dollar, I mean, if we break above 102.20, oh, we're there now, right? Almost.
Yeah,
we're above that
102.20, 102.40 right here.
Yeah, if we break above there, there's a lot of stops, you know, and I think there's a fib, yeah, the 38.2 is the next level. We could even go higher towards 103.5. But yeah, you know, like we said before, whenever the market goes one way in a big way, then most likely it's going to go the other way, you know, and I think this is something we might see. I think this dollar rally, if it does break out, is going to be short-lived, but it's going to take a few people out.
Yeah, that's the thing, right? It's more of a positioning trade, I think, right now. It's more of a, you know, squeeze a few out before you head down towards these lows. I don't, by the way, I don't think that these lows are going to hold. I think we eventually break through 100. That means the euro eventually trades above 110 more than likely. But I think we might have to do some backfilling first before then. What are your thoughts here, Ryan, on the dollar?
A little bit mixed. I think we're just wandering between the ranges. Euro dollars maybe having a little bit of an extension down through the 109. Let's see where it really wants to go. We've got plenty of levels underneath. Dollar yen, that's walking the same old grounds as we have been. Cable, it looks more rally sell than dip buy after the BOE. So that's one to keep an eye on. That magic 125 and 124.50 going to be key. But I don't see anything that's breaking these out there trends just yet.
Do you and you know, following the Bank of England, as a matter of fact, since we you know, kind of get your thoughts following the BOE, any further thoughts from the ones you had yesterday? I know you had a couple comments this morning from some BOE members too.
Yeah, it was Bailey did his thing, didn't he? We had a pretty hawkish announcement when it came out. I jumped into cable longs and those went to the woodshed. As soon as Bailey started talking, and then later in the afternoon he kiboshed it again. So the Bailey trade is still running strongly.
He's good. He is good. At killing the cable. So all right. Well, thank you there, Ryan. Kman, what are your thoughts about the dollar here? I mean, you know, I know you got probably some mixed feelings, you know, considering you know what the euro's doing versus what the yen's doing. What are your thoughts here on the dollar? Just
I think we've had quite solid rejections of the lower dollar trade a bit earlier in the week. Saw the Aussie starting to falter up there. We saw the euro trying to break up, didn't work. And now we are going to test the other side. And I don't think there's much more to look behind, unless they find the immediate solution on the debt ceiling, and then I reckon the dollar will rocket a little higher. But until then, we are in strong ranges, and I don't know if it's going to be that easy, apart from a few, to break out of them. And again, you know me, I'm always looking at the individual pairs. If you look at how Kiwi is catching up with the Aussie now, it's quite a severe drop.
That was a massive move.
Have to note that the lower inflation expectation is bringing that inflation expectations back within RBNZ's target range. So that, in theory, means that RBNZ is done. And I think that is what exactly now the market is trading on the Kiwi, saying that that's it, RBNZ is done, and we are back in their range. So that's why the Kiwi getting hammered today. And then the rest, couple of individual ones. I'm actually starting to have a close look at the mix, because we are seeing just a few of those data starting to weaken just a little bit. We know that the whole world is piling into Mexico, keeping the Mexican peso bid. But I think this 17.5 is relatively interesting on the dollar mix. And then, of course, we have our little adventure in the rand. I think that stuff is whether or not, because there's been some sort of denial of the approval to send arms to Russia. whether or not they gave the approval or not. Fact is perhaps there that they did, and I think it's just a matter of time before dollar rand hits the next set of targets around 1975 or 20, depending what measurement we use. That should be sort of decent targets. I know you have a line higher there, but there's a lot going on. 1975, 20, the big figure.
Yeah, that's but just so you guys know, Kman and myself and a few people in the ForexAnalytix chat room are trading the dollar rand to the long side, and you know, I have orders just in case we get some sort of spike, you know, up towards 21. Like, you know, that's one of those, like, I wake up in the morning like, holy shit, I won the lottery type of, you know, trades. But
you know, this morning it started really nice. I didn't put any offers in yet, but we went from 1918 up to 1950 in a flash. So
yeah.
Yeah, if anything wrong happens due to this situation, or if any investigation shows that they really did send some stuff to Russia, together with the already existing problems in South Africa surrounding Eskom and etc., this could, I was saying in the room this morning, this could have some sort of distance Turkish lira as if it really goes pear-shaped over there.
Yeah, could you imagine? I mean, you get one of these type of these types of moves.
It's never going to be that hard.
Yeah, I mean, it's not an Erewhon issue, but shit, I mean, these are some moves, right? Mm-hmm. Hey, and thanks for the update on the dollar rand. Since obviously it happens while I'm trying to sleep, you know, in the rand. But
since you mentioned the Turkish lira, Blake, the USD.
When's that guy dying? Just asking.
It doesn't seem imminent. The USD Turkish lira has been hitting. It had been artificially capped for some time around 1860, but it has started taking a new uptrend again, right?
Yeah.
So yeah.
Don't forget we got elections this weekend.
I know. And
I know you know. I'm making sure everyone else knows.
We don't know. Yeah, you know. We don't know who's being elected.
And in my opinion, this makes it even more worrying, because I have no doubt that, you know, ahead of the elections, they would want to keep it in check. Now, the fact that it has started appreciating despite getting close to inflation, and we know very well that Turkey suffers from extremely high inflation due to the extreme depreciation of the Turkish lira, and this directly, of course, affects people's everyday lives and their intent to vote whoever they want to vote for, makes me really worried that after the elections we might see an explosive leg higher in the USD Turkish lira.
Really?
Because I'm assuming that a lot of money, a lot of forex reserves have been spent during the past several months to at least defend the Turkish lira from going completely unhinged again. So once the elections are done, I could easily foresee a very strong move higher for the USD Turkish lira.
Is that if Erdogan stays in, or?
Yes, that is if Erdogan stays in, because I believe that any other possibility might have at least initially be met by the market as you know, a reason to be optimistic. But I think the chances are he's going to get re-elected, and if that happens, as I said, I think there is a very high probability of seeing an explosive move higher in the USD Turkish lira, despite having seen, you know, this massive uptrend for years now. I think it can get a lot worse.
All right. Well, it's I mean, it's a scary prospect as far as if you live in Turkey, what that means for your economy. Crazy. All right. So thanks, Steve, for your thoughts there. Stelios had to step away, so he's not here. I
am
Dale,
now. I'm here.
Oh, okay.
We don't want you still.
Stelios, what are your thoughts with the dollar here as we go into the whole debt ceiling debate? What do you do with the dollar? Oh, we already got your thoughts.
Yeah,
never mind. I'm sorry.
One thing I want to add: we've been talking about what's priced in terms of rate cuts, and I think these will need to be taken out slowly.
Yeah.
So that will probably give the dollar a push. Now, will it be enough to push it above this resistance and take more stops? I think it probably will, but I think that's a driver for the short term for the dollar. All these cuts priced into this year, I doubt they're going to happen unless obviously we have a crisis or black swan event or something.
Right. Yeah. That's got to happen, right? You got to see a complete implosion of the U.S. economy to get that. But good point, Stel. Thanks for coming back and rattling our cage about that. Dale, what are your thoughts about the dollar here? I mean, what do you feel about this debate and debt ceiling and what's going to happen with the dollar index here?
Looks like it's trying to break out, but I can't buy it here. So I'm not doing anything too much anywhere right now.
Yeah.
So, I mean, a lot of things I'm waiting for is Stel looks to buy physical on weakness. There's going to be some real nice buying opportunities in some of these silver juniors. Look at the pullback we're getting. We may
what's the symbol for the miners?
Well,
SILJ for the juniors.
SILJ is the
juniors.
Juniors.
SIL.
That does not look good
seniors.
To me. That does not. I thought we'd be here with silver at maybe 22 or so, not with it just a shade under 24. So the miners kind of gave up the ghost earlier in the week before silver did. And I always believed that miners lead, and this was a bad day, and some of the other ones even worse days. Look at that candle.
By the way, if you guys are not looking at the euro, this is a I don't want to be long into the weekend. What if what if debt ceiling gets raised? What if McCarthy and Biden come to a deal? I mean, these guys are all the old guard. We don't have anybody new in office that's leading this charge, so there's going to be some resolution getting taken care of, and no one wants to be stuck with short dollar positions over the weekend. Do you? I mean, what kind of gap would you see in the euro? We could see us gapping down to 108 on some sort of resolution over the weekend. I'm just throwing that out there, and I think people are sensing that going into the weekend. So
for people that trade GDX, I'm looking for about the 30 level on this pullback.
GDX?
Yeah, that's a VanEck ETF on gold.
Yeah.
These are the seniors.
33 is the first support, 31.5 is right after that. And
why don't you just get the double top extension? I mean, this is basically a double top, and if it breaks, we're going to be trading back somewhere
30.
down here.
30 is the target.
Well, that's what I was trying to say before you tried to say wouldn't get down there.
Oh, sorry.
No, I mean, Steve.
What?
Steve. So, I mean, that's what it measures, about 30. So
I don't disagree with you. And there are other side divergences as well. I think it's totally plausible to see a pullback there.
So I think there's going to be some pretty good buying opportunities. The golds are holding up better than the silver shares.
Yes, that is true. And on the other hand, gold and silver are doing better than the equivalent shares. If you notice, for example, notice where the GDX is.
Yeah.
Gold was hitting new all-time highs.
Yeah.
Just
still on. Yeah.
Yeah.
Just a few days way ago. Underperforming. Still
yes.
way
I agree 100% with you.
I would say, me, and I'm just going to talk out loud. And this is not my where my wheelhouse is, if you will. I'd probably buy with both hands at 30. Yeah. So I'm just saying, you know what I mean? Even if it was for a trade, I would be down here just looking for a reversal of this ascending channel.
Yeah.
Just saying. Wow, look at the cable absolutely getting destroyed right now. And if you guys missed my drawing while, I think Ryan or Kman was talking at the moment, I was just putting out a bear flag pattern. That should trade down to 124. So and that could happen today. Like that could happen here with no news ahead of the weekend. No one wants to be caught, with their dollar shorts on, pun intended. You can quite possibly see a move here. Anyway, should be an interesting Friday with positioning, with a lot of talks happening. But I want to show you something really quick. This is the ForexAnalytix chat room. I want to show you how ridiculous this is. I want to show you how good of a trader I am. You ready? You guys ready? Okay. Yesterday at 8:49 a.m. So this is 5:40 a.m. right now. So this is 26 hours ago. Long Aussie Kiwi with stops below 106. Later last night, I got out for 48 pips. You can see my entire board of what I'm long and short, right? You can see it all. And let's see, what price was that? That was at 106.80. You want to see how good I am? I got out right here. I got long here, got out here, and then that continued, like 50 more pips. So if you guys are sitting there thinking, wow, I thought I was the only one that actually gets out of trades and then watches them continue to run, you are not the only one. It does happen to everyone. I've been doing this since I first sat at a trade desk at November of 1996. So first time when I already had my Series 7 license and been a broker, but first time I sat down at a trade desk. I still get out early, and it does happen. So if you think it only happens to you, it's not true, and it happens to everybody.
That's a good pump as well for the traders funding program, because if you were in that, you wouldn't have to suffer with FIFO rules, and you could have got out half the trade or some of the trade and then let the rest run.
I know it's and that that's true. One of the benefits of being in North America is being able to when you're in the trader funding program, you actually bypass the first in first out rules. Although I trade my own capital here, and this is what I do predominantly. So, but that's good for the trader funding program. You are absolutely correct, Ryan. So make sure you guys check that out. And again, I just wanted to, show you guys that things like that do happen. And, I don't fancy myself the best trader on the planet by any stretch of the means. But we all have our ups. We all have our downs. That's part of the business. And one of the things about the ForexAnalytix community, just so you all know, is we do it all together as a group, as a community. We talk about things. We talk about what's happening in the markets. James, who's usually in the Flowonomics room with Ryan and Kman. I mean, we were just talking about the Bank of England and his views on the Bank of England just in the general chat room. So we're all in these different chat rooms, whether we're putting our trades, things that we're buying or selling. You can see I just took my Aussie US dollar short off for the last few days, just took that off this morning. We have an S&P indices room that everybody's talking about what's happening in the general markets, like equity markets, news and research room, posting all of, different news stories, articles, headlines that are being put out, Spanish chat room. So come check us out. If you want a place where, it's a safe community. We don't talk about religion. We don't talk about politics. We talk about some random Netflix movies when the market's really slow, like the summer. I'm sure somebody's going to be me. I'll be talking about some silly show that we've seen on HBO Max. But other than that, it's a nice community with like-minded people. So make sure you check us out. And with that, Dale, do you have anything else for the crew here on this Friday?
Use the weekend to set up your plan for next week. Watch Blake's week ahead video. and be ready to execute instead of analyzing on the fly next week. That's your homework assignment.
Awesome. And with that, you guys should be listening to the week ahead video that we'll be putting together about the next week, because that's where I'm going to be putting a lot of my setups. One of the things that I fancy myself for, and if you guys listen to the Morning Edge, the daily roundup, which is our segregated shows for ForexAnalytix clients, I tell people what I'm going to do ahead of time. Like I give you my plan, and then I trade my plan. So, that's the same thing that we do on, the week ahead video. I'm like, hey, this is how I'm looking into next week, and this is how I'm going to trade it. And so hopefully, you guys and gals get a lot from those videos and these conversations that we have with you all. So, Stelio, Steve, Ryan, Kman, I hope you all have a great weekend. Dale, of course, to our esteemed host, who's here every single day interviewing some of the best minds in the financial galaxy. After we're done here, I know you don't have an interview today, but thank you for always being here.
Thanks, guys.
It's my purpose. So I really appreciate all the hard work you guys go through. I saw a tweet by Gordon yesterday. He said that he finds actionable ideas every day from us. He caught the short side of copper. So, when I hear things like that, I know we're on the right track. So, just helping people. Our mission is to build up and edify traders every day. We hope, and I know we did again. So have a great weekend, everyone. Have some fun, enjoy the spring, and, recharge your battery, because it's not going to, I don't think we're going to have a slow summer.
Thank you,
I
Dale.
think we're having a slow spring. So that's it, guys. Thank you, Dream Team.
Thanks,
for all
Coach.
you do. All right, everyone. Have a great weekend. Don't just count your pips, count your blessings. And you have all weekend to do that. Adios. See you guys.